Day trading opening range breakouts and opening range breakdowns are two of the hardest things for a new or beginner trader to really wrap their heads around. Now, you may understand the setup, but what I'm talking about is how to manage that trade. So in this video, I'm going to show you exactly that. I'm going to show you what happens if the trade goes against you, if it goes in the direction that you want. I'm going to cover all the bases in this video. It's going to be a complete masterclass, a Tricktrades masterclass in opening range breakouts and opening range breakdowns. So let's get right into it, folks. Let's rock and roll. Okay, so now that we're into the screens, I'm going to give you guys a little bit of context. This is an exact trade that we took at Tricktrades, and every step along the way, this is exactly the guidance that I gave live on screen share. So let's just dive right into the charts. I am using Trading Sim software because that has a replay option. And these levels, there are two white levels here on the screen. Those are the levels that I had marked out. Now they might be off by a cent or two because obviously these levels have been erased. But with that said, I'm going to walk you through this trade, and I'm going to walk you through my ideas and as well as how to trade those opening range breakouts and opening range breakdowns. So let's get right into it, and let's press play on the simulator, and I will pause it as I go. Let's rock and roll. Okay, so the market is about to open up. You can see that these are the levels. It's coming down to retest pre-market low area, and market is about to open up. Just give it a second here. Okay, so market is opened up and it starts ripping up. Now I'm going to pause it here because I want to fill you guys in on the trade plan. Now, first directional pick on these stocks are always super important. If it starts running straight up, it will exhaust itself when it hits that first resistance level. Now, using your crosshairs on your chart, and I don't have this software quite set up, I don't have crosshairs, but you snap your crosshairs in order to see how close you are. Now, you're going to see this comes within 20 cents of the level and about 25 cents of pre-market highs. You are really protected in this trade, so as it starts coming up, you are going to start in short. Okay, first directional pick on very tight opening ranges. It's really important, first directional pick. So we're going to continue on here, and as it comes up, you're going to see that's, and I'll let you know where we executed. So let's continue. So it keeps coming up. As it pops up, there we go. We have executed this trade. We're in this trade short by buying puts. It starts coming up more. We add into that push. Now it starts pulling back. Now I'm going to stop. I'm going to pause it here. As it starts pulling back, we are all immediately pulling profit. Now remember, these are options. It doesn't take big moves in order to make big gains. Already you're probably 3-5% profit. Now I know that doesn't sound like much, but remember, we're trading an opening range. We will add into it if it starts to work, or we will bail on the position if it doesn't. Remember, it all boils down to first directional pick, okay? So let's continue here. You're gonna see this stock SPY start to pull back into support. When it does that, that's where we are taking the majority of our profit off. Now, the reason for that is that's your first level of major resistance or support, however you wanna look at it, in your trade. So since we're in short, we're looking at it as resistance. That has an area that it will want to bounce. So when it comes into that, we are paying ourselves. And by paying yourself, I mean you are taking contracts off. So let's say you had a position of 10 contracts. We've already on that first red candle down, we've taken off a couple of contracts, like 2 contracts. As it comes down into that support, what you want to do is solidify that green trade. So you want to pull off enough that if it does go against you, it's not too big of a deal. Now, either it is going to be scratch or flat, or slightly green, slightly red on that trade. Now, don't worry, I'm going to walk you through exactly what to do in these situations because this trade doesn't work. It actually fails and it rips up. It actually stops us out, but that's fine. That was part of the trade plan as well. Now, I always give plans where if it does fail, we will do this. So if it does this, we will do that. Okay, so let's continue on. I really want to make sure that you guys are following and understanding as I'm going. So as it starts coming down, you guys will see here, we'll just kind of relax. It will pull down into that support. I can only speed these candles up so much. So right now, all you're doing is you're getting prepared to take off some profit. It is pulling back into that support, so you are paying yourself. You can see now, this is important as well. So right now, you can see that there's a lot of shorts that jumped in this. Okay, now there's a lot of retail traders that obviously trade the very same type of setup. This is more of a setup, but it's how we counteract something that isn't working. That's part of the strategy. Okay, so when it starts squeezing up like that, you know this thing is most likely going to rip up. There's going to be an abundance of shorts. So it is okay if it starts to fail, meaning if it pops up, what we are going to watch for, we want it to break through. Now we had our stop basically right where it topped out, okay? So we're still in the short. We have not stopped out on it. Now we've paid ourselves, we're only holding a very small position. It is going to pop up, follow my cursor, and as it pulls back, we will add in long. It will pull back and retest this support. Okay, this is very traditional technical support and resistance is all this is. So let's continue on. So as it pops up, that's okay. We know that this is going to stop us out. It wants to squeeze up, that's okay. Our stop is somewhere in this neighborhood. So you let it squeeze up, don't panic. Don't stop out of your position because there could be a way that you can get out as it pulls back to test this support. So you just let it do whatever it wants to do, obviously within managed risk. We do have a risk strategy we call standard risk at Tricktrades. So we just let it go up. Okay, now it starts to pull back. So once it starts pulling back, we're checking with our crosshairs and now we're starting to add in long. As it pulls back, because it's obviously very strong, it might not want to test this level. It's come down into pre-market high area. We have entered long. So now we're in long and short at the same time. That's okay. It's not that hard to manage. So once it pops up, confirms over this candle that is our stop. So we're still patient, still patient. Now we're in long and we're still holding a very few amount of contract short. So once it pops up over this, we'll stop out. And it's about not panicking in these situations. Too many people panic and they freak out and stop out. Okay, we have stopped out on the short. We are now riding our long. So we've already basically, especially with paying ourselves in the amount of contracts that we started in here, we're now green on the day and it continues up. And we'll let this play out as I'm talking here. So the idea behind tight opening ranges, and it's important to understand, I don't want to say it's a 50-50. It's not. It's not a 50-50. If you have a detailed strategy in place, that at the market open, it comes up into that level, we are going to go short. First directional pick. Sometimes it doesn't work. So you need to have that backup plan. So with that backup plan, it's important to understand if it pops up and then pulls back to test support, we are averaging into that long. It is now proven it is strong. So in this long, this is a big trade now. Now we're probably at about 40% gains on this trade, roughly. Now don't quote me on that. I could be wrong. I'd have to go back and take a look. I've actually got my trade recap up here with my entries. And in time, I'm gonna start showing you guys my actual true to life entries on these. But you can see this is obviously a very big trade, isn't it? That's a nice trade. So this is why you don't worry about getting stopped out in that first trade. Because if it picks its true direction and it's in the opposite direction, there's always a way to get back into it. So follow my cursor. Now, if this broke, so you were in short and it breaks, a lot of people want to add as it breaks those lows. Don't do that, okay? What's going to happen here is you're going to chase it down and you're going to add on those pushes down. Never do that. I know a lot of people tell you to do that. Do not do that. And the reason for that is It will retrace. It will give you an opportunity. People need to understand, new traders need to understand, there's always an opportunity. You have to trust that. So as it breaks this level, pops back up into previous support, it will then, what I call the head bump, it will bump its head into that level of resistance. Remember, these levels are essentially brick walls of support or resistance. They're hard to break, but if they happen to break, that's okay. Relax. The biggest mistake that traders make is they freak out. They are extremely emotional in these trades because a lot of people are underfunded when they first start trading. I was too. I get it. I understand that. Okay? But you have to remain calm. And this is where trading education and proper mentorship do come into place. Now, this isn't a sales pitch. This is straight up fact. You need someone that has been through this sort of stuff and can guide you through. So as you can see here, to kind of wrap this trade up, this thing has went up a mile. It was an absolutely outstanding trade, and I locked in. I got my P&L on the other screen. I shouldn't really say. I don't want to say if I don't have it up on screen, because then people want to attack that. So in time, once I get this new setup set up, I will have the P&L, the trade entries that you can see that exactly what I'm telling you is exactly how we traded it, and that's it. So to wrap up this video and go over some of these key points, this is about tight opening ranges. It is about first directional pick. As it comes up, we go short. If it goes down, we go long. Okay? So there's that. If it fails, you wait for it to blast through that level of resistance, if we're short, pull back into that support. It will bounce off of that support. You need to trust it, okay? Go long. And if that doesn't work, let's say now there's a plan C. If that doesn't work, you are still in short. You haven't stopped out yet because it wouldn't have continued past that point. There's always a way to manage these trades, guys. That's what it's about. It's about proper trade management and really just understanding a strategy, working a true to life strategy. Well, folks, I hope you enjoyed that. I hope you learned something. Make sure to go out and check out tricktrades.com, and I hope to see you on the inside. Ciao. Adios.